Hello guys, welcome back to our channel Sarath Financial Info. So today I will talk about the Varun Beverages and PepsiCo affairs. Like what is like how Beverage has become like favorite stock of the people. So let's start. PepsiCo doesn't really run its own show in the India. Same thing is for Coca-Cola also. They don't run their business, so they don't manufacture. Actually, they do marketing stuff by themselves, but manufacturing done by others vendors, and they call them bottlers. So for PepsiCo, it has a loyal partner of nearly 30 years in the country. A company by the name of the Varun Beverages Limited, the crudest and the most simple explanation of the VBL's role is that it bottles the fizzy drink for a sale. All that PepsiCo really does is land its brand name, sell, and concentrate that makes the beverage to VBL and dabble in a bit of its own marketing by splashing 350 crore a year. By getting superstar like Salman Khan to endorse it. So it prefers being a asset light company and doesn't want to set up manufacturing facility in every nook or cranny. Asset light company means like Ola, Uber. These companies don't own any cars, but they do the this renting car business. So same way PepsiCo do the business. So these companies called asset light company. So when you spot a bottle of the Pepsi in your Kirana store or either in Mega Mart, it's not because PepsiCo, the American giant, dropped it here. You can bet that it was delivered or stocked by the Varun Beverage. Now, when the VBL went public in 2016, there was no fanfare. So the IPO of that VBL came now 23, so it came back 7 years. So the stock price dropped by 6% on the day of the listing on the stock exchange. People whispered about its wonky financials, a couple of the years of losses and mounting debt were worrisome. But that's all in the past. The stock's fizzing and investors just can't get enough. In the past 1 year, the stock price has jumped by 100%. And if you decide to take a punt on the 5 year ago, you sitting on the handsome return of 500% in 5 years. It sounds too good to be true, and it got you thinking, what is the special about the Varun beverage? After all, it can't not launch its own products. It cannot really decide on the prices on its own. It's even 100% dependent on PepsiCo for the raw material and that goes into the beverage, and it's the PepsiCo brand that drives the sales. So without PepsiCo, there is no Varun beverage. That seems quite risky for that business, like dependency on the PepsiCo. Well, on the face of it, yet yes, but you could flip this thinking a bit. Maybe it's PepsiCo who is dependent on the Varun beverage. What do we mean? Until a few years ago, VBL wasn't the top dog in the PepsiCo's India business. In 2011, it's contributed just 26% of the PepsiCo's beverage sales in India. But by 2021, things look significantly different. It contributed to the staggering 85% of the PepsiCo's India's beverage sales. And it got here simply by the virtue of the convincing PepsiCo that there existed no better partner for the beverage giant in the India. See, until 2019, PepsiCo ran its own bottling and distribution until in the south and west zone of the India. But at some point, PepsiCo probably just thought VBL can run it in India better than us. So PepsiCo took a step back and refranchised units. It handed it over to the trusted partner, and this gave to VBL a presence of across 27 states and 7 union territories in India. So VBL is a Pepsi monopoly reality. So the market percentage of the VBL have now 85% of the PepsiCo bottling in India. So in 16 it was 45%. So that means PepsiCo needs Varun Beverage as much as Varun Beverage needs PepsiCo. And slowly but steadily it's gained and right to the bottle and distribute pretty much every PepsiCo beverage that exists, including the Tropicana Slice, Gatorade and Aquafina. Today it is also has a new beverage in its arsenal, Sting, an energy drink that is priced at just one-fifth of the Red Bull and which already contributes to the 8% of its total sales. But why stop at the bottles and drinks? PepsiCo's food portfolio is also quite lucrative too. In the March, it signed a deal with the PepsiCo to manufacture one of its snacks, Kurkure Puffcorn in India. And who knows, it could soon be the charge of the Lay's and Doritos too. It could give a nice little revenue mix. And the advantage is that the more products that VBL handles, the easier life gets for the retailers too. They don't have to deal with the VBL for the some beverage and Pepsi for the foods. So when one entity manages the entire product mix, it could have deepen the relationship with the stores too and give the company a legs up. Maybe it will be the able to snag some more shelf space and it could even result in higher sales that way. So it's something that PepsiCo will want. So sure, you could argue that world is trying to cut back on the carbonated sugary beverage and it could be blown for the VBL. But you can be sure that it's something PepsiCo is deeply thinking about. New products launches to keep up with the time will always be a part of the game plan. And if you just look at India, and the potential is still wide open. Out of total of nearby 10 million retail outlet spread across the India, and VBL has entrenched itself into only 3 million stores. So 7 million stores still they can get access. So for the simple reason that most retail outlets can't really stock VC cooler because of electricity issue, but as India's electrification program picks up pace over the next few years, that could open up an opportunity like no others. So there is also matter of the underpenetration. Take Bihar for instance. According to report by the Motilal Oswal, Bihar's per capita consumption of the carbonated drinks is just 30% of the national average. So convincing the people to drink up could be a quite lucrative proposition for the company. That's why VBL is upping its manufacturing capacity in the Bihar region also. And since VBL has the right to the bottle Pepsi in India till 2039, so it's hard to see someone else breaking in. But it's not just India, the world is the oyster for the Varun Beverage. Okay, so maybe not world, but definitely Africa. See, the Africa is emerging market, so PepsiCo only has the presence in the 13 countries in Africa at the moment, and its rival Coca-Cola already serves 50 countries of Africa. So there is a massive opportunity to be widened and reached. So and VBL already doing a great job in Zimbabwe, where it started its negligible market share and now controls 50% of the market. So if PepsiCo want to spread its wing, it has a perfect partner in VBL, and this could be give a company a nice boost in the international sales. So a strong international growth for the VBL. So a lot of the VBL's growth has come on the back of acquiring PepsiCo's other franchises partner. But since it commands a nearly monopoly now, that avenue is cut off and it has to grow organically by snatching away market share from the rival. And that could be the tough gig because Coca-Cola ring supreme in India. It even that uber popular thumbs up its portfolio. So making further inroad isn't going to be cakewalk for the PepsiCo. So competition is heating up from the other big companies also. We are talking about the Reliance acquisition of the Campa Cola, a once iconic brand that it is trying to revive, and there are plenty of the other branded players who are trying to make a dent regionally. So anyways, for now the story is written in the VBL's favor. Whether you get a burger, fried chicken or cheesy pizza, you will get something to wash it down, and with what? That is either Pepsi or either Coca-Cola. Maybe in the future you would have Campa Cola also. So thank you for watching it. Please like, share and subscribe, and please share with your friends this great story, and be in the touch with us to know these kind of stories.